How's it going, everybody? Welcome to Chart Request Live. We do this every Tuesday and Thursday. On Thursdays, you're graced by your host, Steve Strazza, myself, and Patrick Dunuwila from the Chart Report, who's here with me. The idea of this show is that it's your show, guys. We want you to come on, bring the ticker requests and the chart requests that you have, and tell us about the charts that you want us to talk about and analyze. And that's what we're going to do. We're going to try to hit as many of them as we can. I think we already have some in the chat since we're getting a little bit of a late start here. Pat,
We sure do. We sure do.
what do we got?
And Steve, I got to say, I love this show. It's a great way for people to learn too and get a glimpse of your process and kind of how you look at these charts and how you see these trends.
I mean, it's the people's show. This show is for the people. But it's a blast too because I don't have to prepare anything. I come in here, I have no idea what people are going to request and want to talk about, and we figured these things out together. So let's book
All
them.
right. Well, why don't we kick it off with Costco? MP in the chat. He wants to see Costco.
I feel like this one is this the same person asking about this one every week?
Have we gotten a few requests for this one?
Which is a great strategy, right? If you really like a stock, just come on here every week. We'll talk about it every week. I don't care. So Costco, I always think it's important. I zoom out here. So let's just context, right? I'm always going to start with the daily chart and a 200-day moving average. A lot of times I'm going to hide the 200-day moving average, right? But right now I do want it on my chart because we're experiencing so many transitions in the primary trend. And that's the key thing that the 200-day moving average does for us, right? It identifies the primary trend. So right now, I'm finding it very helpful to keep on my charts. Every now and then, I will flip and add a RSI 14, and we'll flip to that screen. We'll look at relative trends. But for the most part, we'll be looking at a daily chart, the 200-day moving average. That's what this is here. For a stock like Costco that's been a leader for so long, I just want to zoom out to a monthly chart. Right, so you kind of know you're in good hands. Goes back to the 1980s. Anything, Pat?
Man, I mean, that certainly looks like it's kind of coiling into a tight triangle there. Those types of patterns when it contracts into a narrow range like that, that usually suggests kind of building potential energy for a large move. We don't always know in which direction they resolve, but typically you err on the side of the prevailing trend, which in this case is clearly higher. But man, that looks really tight. If you zoom back into where you were, I mean, you can just clearly draw rising support and falling resistance there. Just a really tight kind of coil pattern.
So that's what Patrick's talking about. And I've drawn fibs on the chart. Clean it up a little bit. So the drawdown that began in 1992 and ended in 1995, I've fibbed this one out, right? This is why we use these levels. I can't really tell you why they work.
Isn't that amazing how they can come into play like that, decades later?
Look at how the stock just reacts to these levels over time. And no, it's not.
And Steve, you said, I don't know why these work, but and I don't either. But the best explanation of fibs that I've ever heard is from Bartoloni, and he was describing it as a rock hitting the water, right? When you drop a rock and it hits the water, it causes these ripples, right?
Yep.
And you could really look at those ripples and you could measure them as they're based on, how high the rock was dropped from, but there's proportions, and this is kind of like the natural law of growth.
They're natural levels. It's ancient math. Like for me, Bartoloni's so good at this stuff. Like I could listen to him forever. There's a lot of guys, in the industry who could give you a really good answer. For me, I've just seen them work so well for so long. That's all I need to know. I'll go concern myself. Right. Figuring out why they work doesn't help me make money. I know that they work.
Right. The why can be a dangerous question for technicians sometimes, right?
Look, I mean, it's examples like this over and over and over again. Zoom out on a chart of Apple, draw a big fib retracement. I think it's the .com bubble drawdown. You'll see the same thing. We just respond to these levels over time. So for something like Costco, I don't know who's asking the question, but if you're in the chat now, what's your time frame? right? Because that really matters for this. Let's zoom in now, right? Knowing that this is a stock that over time tends to reward you for buying weakness in it, knowing that, let's zoom in. This is a weekly chart now. Pat, this is the coil you were talking about. Look at where it
Oh
began.
yeah.
Right. So
And
this
it's symmetrical too. Very symmetrical.
this was last year. And look, I don't think twice about the way I draw these things, right? For example, you might be watching this and say, why isn't he drawing the, troughs together there like that? I'll draw right through because, again, it's just the essence of the pattern, right? It's a coil. It's a continuation pattern, right? Right at a key level too. So 2,900 was our last price target. Zoom way out. We're consolidating constructively above that level, right? You want to see these types of consolidations take place above risk levels. That's always like, such a bullish characteristic. You could argue that this trend line is kind of breaking. Like if we zoom in on the daily, right, the upper bounds of this coil. And again, this is not a textbook continuation pattern by any means, right? The textbooks would tell you that if this is a short-term continuation pattern, it shouldn't take much more than, a couple weeks to maybe a couple months, right? I'm talking about like bull flags and bull pennants. So that's not what this is, but it is some sort of consolidation, right? In the context of a structural uptrend. If you draw the downtrend line from the all-time highs just last year, here, you get something like that. We are breaking trend. You're seeing that shift in trend a little bit. Let me see that 200-day moving average. I'll bet it's starting to, flattening, close to being ready to curl higher here, right? Especially with all this August action now rolling off. Okay, so
Yeah, and I like that you emphasize not being too precise. It's the general structure, the general trends that we're kind of looking at, especially if you're judging it from a long-term perspective on a longer term monthly or even a weekly chart. But let's move on. Yeah, we've spent enough time on Costco.
on a
So
on a tactical basis, there are 1,000 charts that look better than this right now. But that's not to say that a few
yes,
months from now, this doesn't have a nice looking base and we're back at all-time highs. And that's why it's so important to zoom out. But yeah, let's move on.
all right. So Wavy McFly, shout out to Wavy McFly. Hello. CMC. Why don't we do this one? So this was a name that wound up on our scan the buzz this week. And it's up big today. It's up over 7% today. Not sure if it had news or something, but man, that looks like, what is that? Highest since it's new 52-week high. But either way, strong move there. Looks like probably the best day in a few years, at least 2-3 years.
This was their earnings.
Yep. You know what? I wrote that too in the report. I said this stock reports earnings on Thursday, and I completely forgot.
Dude, this is a base we've been watching for so long. Let's just talk about the earnings real quick. This is I don't know if it's building materials.
It is, yeah, concrete and all sorts of building material.
Hot place to be. These building materials stocks have been so good for so long now. So it doesn't surprise
I
me.
wonder if it has anything to do, you're seeing the home building stocks break out, and you're seeing the companies that make the inputs for that stuff also doing well.
100%. It's the same theme. In fact, all of these stocks should be in the home builders ETF, right? They move in the same way. So slight beat on the top line, very slight beat, pretty solid beat on the bottom line. Company's probably just reporting earnings that were expected, but it is getting a 7.5% move on this. For this one, we got to zoom out. Really, all context. Been waiting for this base to go for so long. Finally went, just late last year. This is it.
That's right. Yeah.
The hot corner. So we've been watching it for so long. You got the breakout. The way you do something like this is easy, right? Just fib it out here. And that'll give you a nice little guidepost for where we're headed. 60 to the upside, and then after 60, 94 is the next level. Really, for me, we got those pivot highs at 58. That's it, for the next entry. So you could trade it back to 60 here, but I'd rather probably enter on strength above the highs.
Yeah, this one's in XME. I think there's probably something to be said about it reclaiming 50, right? Nice psychological level. I think it's probably more important that it kind of reclaimed that shelf of shorter term resistance there if you zoom in.
Yeah, so 200-day moving average has always been rising in this one. That's what I'm talking about when I say it's a leader, right? A lot of 200 days we talk about sloping down and then curling higher. This one's just been steadily up for a long time now. I think this is the level you're talking about, right? Tactically, this goes back to the first quarter of this year, right?
Yep, that was it.
$50 level. Look, when you see a candlestick like this, it's never a bad thing. That is just such a nice stick right there. 7.5% today. Let's look. We might get follow through the coming days and weeks, and we'll be in the upper 50s before we know it. So I like this one a lot. It's a leader. With strong stocks like this, it's less a matter of, if we want to buy them, and it's more a matter of just figuring out how to define our risk and how to get in. Right. So if you want to do that at 50, if you want to zoom out, use the base breakout level, buy weakness towards that, you might never get it. If you want to buy strength above the pivot highs, a lot of different ways you could do it. Just have a plan and then trade that plan and sleep well at night knowing that you're in the leader.
I like that. Yeah. A lot of ways to do it, depending on your time frame and stuff like that. But the most important thing is just have a line in the sand. But I got an easy one for you. You ready for it?
Amazon.
Nope. Riot.
Woo. Look, this
Paul
is
in the chat wants to see Riot.
this is
Now I know this is one that you've been watching all week. You actually bought calls in it earlier this week. Is that right?
yeah, but I'm out of it as of this morning. I sold half
Oh, wow.
yesterday. Dude, there were weekly calls. It was just for fun.
Oh, you had to. Yeah, yeah.
I was playing this right here. Why did I buy calls? It's all that. And I did not get in on this day here. I got in on the following day, right? Once we got that confirmation and reclaimed, what do you know? The August highs, right? That is the line in the sand for so many of these charts right now. I just couldn't help myself with something like this. I thought, it's a bull market. We're very likely to get that automatic reaction now higher off of this whipsaw at this key level. And that's exactly the trade I made. And I even felt a little bit late to it. I was chasing. I actually think I got in the morning, Tuesday morning when I talked about it. I did it live on the show. I think it was Tuesday morning. And it felt like I was chasing because, we're trading here around like 10:50. I'm buying 11:50 calls that expire 3 or 4 days later. But the bet I was making was simply that we would have at least like 1 or 2 more days of upside. And that's what we got. And we did open a little bit higher today. I was able to get out of the remaining position, but it was a triple, but almost.
Oh, nice.
Yeah. So that's it.
Yeah, I mean that's a textbook bull trap right there. And I was telling you earlier when you were telling me that you were buying calls earlier in the week, I said, we were the ones that we were the bull trap, like so we were actually long Riot and then we got stopped out at the $10 level. And of course that's the kind of whipsaw that he's talking about. So we were the kind of whipsaw in there. And yeah, it sucks seeing it rip back without you, but what are you going to do,
So it happens a lot. And here's really the lesson. And here's like the advice that we try to give. And I talk about this all the time. There's nothing wrong with just getting back in. Just get right back in, right? Respect that stop, get out if that's where you had it, right? Some people, and this isn't something like that you could write in your report. Some people should see this and you say, I'm long above, say 1025, right? They should automatically say, I don't want to be shook. Maybe I'll build in like a 2 or 3% cushion below 1025, right? But that's
Yeah.
to do. What I would say is if you do get shook out and you still like it, and it turns out that it, whips right back in the opposite direction, it doesn't matter if you sold it yesterday, buy it again tomorrow, right? Like get back in these trades. Some of my best trades have been that way. They've been trades that I've been stopped out of and then just got back into. They weren't ready.
You know what I think it is? I think for me, and again, I'll reiterate, it's all personal preference, but I think I had a problem revenge trading earlier in my career. So I try to, once I get stopped out of something, I try to just leave it be and walk away for a little bit. But that being said, I'm actually more bullish this chart, seeing that little shakeout than I was even when we were long.
And that'll happen a lot. So like you said, you're even more bullish now. You got to get over the revenge trading thing and just go.
Yeah, I know.
See, what you're saying just speaks to how we're all different, right? So you have to do
Yeah.
what works for you and mentally too. If you're going to worry about that trade and I got out of it, I'm better to just take my losers and, put them away in a pile. Maybe I'll revisit in a couple months, but not tomorrow. If that's what works for you, then good. Someone like me, I don't, I feel nothing. You know, I'll get in, I'll get out, I'll get stopped out 5 times. People will make fun of me on Twitter, and then I'll still make money off of the trade when it finally goes. And that's what's fine for me. Like, you know, you have to trade what works for your personality type.
Absolutely. But hey, we got a couple people asking us about this ticker OPRA. I'll call
Dude,
it Opera for
this is
lack of a better term. What is this company?
it's a web browser. Does anybody have any information on this? Because beautiful chart. I thought it would
Must be an AI play, right?
be 1.6 billion cap. These guys pay a dividend, is that right? Okay. I just looked up the website. It's a web browser.
Provision of web browsers.
Mm-hmm.
What?
Yep.
Interesting.
So
Smells like AI to me.
smells like AI. The chart smells like AI. Flip into a line chart here because it's kind of gappy. It trades like it's pretty illiquid or was illiquid. So there you go. Is that a blow off top at our target? I don't know.
What would you do with that, Steve?
I would have took profits right here. That's what I would have done. Got a clean level here.
And what did that breakout look like? I'm just curious. Like, if you switch back to candles, when it initially broke that shelf that you just drew, was it like a energetic move on earnings or something, or was it just kind of like a slow and steady breakout? You know what I mean?
This was an earnings move here. This little volatility. And we haven't had earnings yet for this quarter. Yeah, the last report was April. Here, we did have news.
And I'll bet you if you threw up RSI on that chart, I bet you there'd probably be a little bit of a divergence building.
Of what?
If you threw RSI on the chart, I bet we'd see a little divergence building. I mean, I shouldn't say that before we see it, but
Definitely.
you seeing anything on RSI?
Definitely.
Oh, you know what? RSI actually looks pretty good. No major divergence.
Looks pretty good. It is hitting its lowest level since May. Um,
Yeah, but that's a bullish RSI regime if I've ever seen one. I mean, that thing's just been oscillating between 80 and 50 for the last year.
it's barely breaking 50 since last year. Barely.
Yeah.
Incredibly
Well,
strong.
yeah, since like November. Yeah. Yeah.
What a strong stock. And I mean, look, this thing bottomed out at $4 in October of last year. It's more than quadrupled since then.
So again, gun to your head, if you had to think, how would you play it?
Weakness back above this 19 and a quarter level. That's it.
Where would you be a buyer?
I'm sorry, strength. I'm sorry, strength back above the 1925 level. Strength. That's it.
Where would you be a buyer this thing?
1925 on strength back above 1925.
Like a retest kind of thing?
Trade it like this, and the longer the better for me for something like this. I would love to see this consolidate and just chop around here for a while. Then I could buy strength back above the 161.8% Fibonacci. Yeah.
All right. What else do you guys got as far as tickers? Keep them coming. Keep dropping them in.
It's extended. It's stretched. If you don't have anything, I have some.
Oh no, we got more. What about TSCO?
It's a Tractor Supply, right? Yeah.
I believe so. Yep.
You shop there?
Oh yeah, get all my tractors from Tractor Supply Co.
Strong stock. Been a strong stock. Let's check the weekly. Yeah, wow. Look at that. Wee. Nice. How about a relative trend zoomed all the way out? One thing to go up on absolute terms, but this one's been moving steadily higher on a relative basis as well.
They've got to be what in the industrial sector?
Yeah. Might be discretionary. It's a store, right?
Yeah.
Retail trade. Yeah. Store. Almost a 2% yield. 24 billion. TSCO. So how would we play something like this? This is range bound now, over shorter time frames. Right. This is consolidation. within the context of a primary uptrend. Zoom into the daily here. It is
Yeah, a little fail breakout there earlier this year, huh?
a strong stock. Yeah, you're talking about, Pat's talking about this right here. Little failed breaky action back in the box. Like with this one, it's easy. You know, you buy it back above these 2022 highs, right? Because this was a well-tested level here. Let's just look. Boom.
It's just hugging that two. What is that? A 200 day or 200 week? 200 day, right? Moving average.
200. So 240 is really the level for me, right? You got a touch there in February. We had a touch in April of 2022, another touch late 21, early 22. Back above 240, you buy this one, and you're confident at that point that you are getting a nice breakout here, right? From this little consolidation pattern.
All right, you ready for another one?
Yep.
Xylem, XYL. We got a couple requests for that one. And guys, just keep them coming. We got a few more to get to, but these are great. Kind of a messy chart there.
I was just gonna say it's a base, but it's not the cleanest, right? Again, as if we haven't given Leonardo enough love today. Right? I mean, look at these fibs.
Yeah.
You just learn to trust it. There you go. So nice base here. Really shaping up, climbing up the right-hand side of that base now. You know, after a trend retraces 38%, very likely that it'll retrace 62%. And after a trend retraces 62%, it's very likely that you get the full 100% retracement. That's where we are now.
And a retest. Yeah.
Yeah, right. Back to those old highs.
Very well said.
So 113, fine. If you want to, you know, get that confirmation above these pivot highs at 118 from January of this year, that's fine too. But this base is working, right? You see the 200-day moving average has flattened and is now curling higher. So like I said, whether you want to define your risk at the year-to-date highs or the 62%, you have options. They both work for me. So whether it's 113 or 118, price target of 138 and change, that's where we're headed.
All right. Rachel Fintwit wants to see a few. Uber, Amazon, Coin. Why don't we do Coin?
Request, Rachel. You got one request.
What about Coin?
We like Rachel. Listen, I like Uber a lot. Let's do Uber too. And then we will do.
Sure.
Big fan of Uber. Long the stock. Beautiful base here. Not the cleanest, you know. We were talking about buying this short-term continuation pattern breakout a week or two ago. We got it. And I think we're well on our way to target 2 here. So 46 3/4 is target 2. That would be the next place I'd be looking to define risk and get into this trade if I'm not already in it. So yeah, that's it. Oh, 47.
You know what I love? You know what's an interesting ratio chart? You ever look at Uber versus Lyft?
Yeah, it's not even close. It's been a blowout. It's always a blowout. Good point, Pat. If you're looking for a vehicle to express a bullish thesis on the ride-hailing industry, well, here's Uber versus Lyft. You have one option. Got to be Uber.
Your boss comes to you and says, you got to be long a ride sharing company. Which one do you choose?
It has to be Uber, right? This is why we look at relative trends. You have one option. Don't ask me about Lyft. Let's do Coinbase quick. Hot mess.
Oof. Heartbreaking chart there.
It's accumulation, but boy, is it sloppy, right?
So Rachel asked a good follow-up question. She says, you know, should you short Lyft here? Pair trade. Would you go long Uber, short Lyft?
No, because the most beat up stocks tend to rip the hardest in bull markets. We are very much in the heart of a new bull market. So I don't want to short any stocks really. I mean, the list of stocks I want to short is
She,
very,
she
very
was
small.
she was phrasing it more as a pairs trade, but yeah.
Even maybe not in this environment.
Getting a little too cute for it.
It's just not in this environment. Listen, there are staples names or something that I don't hate shorting here, but you don't want to short the most speculative techie growth names, the most beat up names. That's very dangerous.
You need another one?
Oh, we were doing Coinbase, right?
Yeah,
Message.
yeah.
It's still accumulation here, right? We went from, well, let's see here. We went from down to sideways, and we'll eventually go up, I think. But we're just not there yet, right? We were close back in February, and then again in March, upper 80s here. But this stock is just dealing with a lot. It's going through a lot. It's got all the worst news, and it's not just like or hot takes. It's like real things being thrown at this company right now. This is
Man, you've been all over this one too. I mean, you must see this chart in your sleep.
was a Super Bowl. Everybody knows that at this point we were very long the stock earlier in the year. The trade was good. Um, and I slowly got out of it. I'm now fully out of it. I sold the last of it just a few weeks ago here after the SEC suit. So look, again, maybe I'll revisit one day. I thought these guys would be the leaders in the space. Now I think that your traditional, old school financial institutions will be the leader in the space. So look, the facts changed. So my opinions have changed. I don't love Coinbase very much anymore. I do think that the crypto miners, though, offer an excellent vehicle to gain exposure to the crypto space, like we've already talked about. Riot, Mara is another one. There are some hot charts here. Hot is another one.
Hey, Nikki in the chat, he brought up Spotify. I think that's an interesting one at a pretty key level right now. Why don't you pull that one up?
We'll do it. But Pat, look at this. The miners,
Ah, sure.
were down. These Bitcoin miners were down big this morning. Look at this candle in Hut Mining. These are stocks that are just experiencing a relentless bid right now. There are just far more buyers than sellers. We've been seeing it since last week now, since Friday when these big rallies kind of kicked off and the Bitcoin rally kicked off. Spotify,
Yeah, quite the reversal today.
yeah, huge reversal candle. Look, this is one of
And
those.
that weakness was probably on profit taking. I'd assume just because it had been doing so well
Right.
in the short term up to that.
Look, this is the kind of base that we want to be buying. Looks like it's just like this is some slow grind higher here. Interesting action. Let's see where the
Yeah, that 156 level looks pretty important. And if you zoom back even further, it came into play as resistance, I think, prior to 2020.
call Pat. So Pat's talking about these price peaks from 19, early 20, coming in right here at this 160, 158 level. Yeah, call it 160.
Man, still not at its 38.2 retracement though, huh?
No, nope.
How
Listen,
much was this thing down last year? Let me check.
I don't love the momentum here.
Yeah, and I bet it's like if we looked at the relative trend here, that would be interesting too. Because there are so many other stocks in this space, or if you wanted exposure to a growth or tech stock, maybe a recent IPO, there's probably better looking charts out there than this one.
I was just saying I don't love the momentum. This is what I'm talking about. Like this thing's been like a real slow grind higher. That's why I just drew that channel on the other chart, right? It's just not moving higher with any sort of bullish momentum at all. In fact, since March now, really been unable to achieve an overbought reading. So this has been a really lazy uptrend in a time when other tech stocks and other growth stocks are having some very significant momentous uptrends. This one looks a little bit lackluster. So
Momentous. I like that word, Steve. Dude, this thing fell 80% last year. Wow. And it's still down
and
56% from its
guess what?
highs.
we were all still using it every day throughout that 80 drawdown.
Not me. I'm an Apple Music guy.
Oh, okay. Got anything else? It's 1:35. Let's wrap it up.
Yeah, we had somebody mention PayPal earlier. I know that's another one that you've been all over. Why don't we end it on that one?
Scooping and scoring. I'm long against, probably give myself some room here. 65.50, call it. I got long around 67 the other day. Let's shake and bake. Let's go. I mean, this is really
The
it.
scoop and score. They need to add that to the CMT curriculum. I love that.
Again, it's what is your
If you don't know, the scoop and score is Strazza's version of a fail breakdown. Is that fair to say, or kind of a whipsaw?
yeah.
How would Strazza define the scoop and score?
It's a bear trap. Bear trap, right? So the bears get trapped here on a very obvious, breakdown level, right? They're trapped, and then we eventually rip higher and scoop back above that level. That's the scoop. Now we just need to score.
I love it. Do you want to leave it here for now?
We're done.
Any more? You want to keep going?
Oh, that was good. We got to go.
All right, let's wrap it up then. Thank you guys for
The producer
sharing all these.
telling me we got to get off here.
All right, then we should probably hop. Why don't you wrap it up for us?
I thought you were going to take us out. All right. As always, thanks everybody for coming and joining us here. Love this live charting stuff. Patrick and I will be back next week. And for all of your regular programming, just tune into Stock Market TV. We'll be back with the morning show tomorrow morning at 8:30. Really looking forward to it. We have a great guest. See you then.
Thank you guys.